Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 high-yield dividend stocks, all priced under $20 per share. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 cheap high-yield dividend stocks that also come in with a strong buy consensus from Wall Street. So we're going to take a look at these companies, what it is that they do, and of course what Wall Street is predicting for the stock's future. This week, to celebrate Valentine's Day, TipRanks is having a 30% off sale. So if you've been wanting to unlock some fantastic investment research tools, now is a great time to do so. Head over to TipRanks.com to take advantage of the savings now. Let's get right into our high-yield dividend stocks. First up, we're taking a look at Petrobras. Their stock trades under the ticker PBR and is currently priced at $17.42 per share. Their stock has seen growth of 85% in the past year, including upside of 15% in the last 3 months. Petrobras is a Brazilian-based company that produces and sells oil and gas. They are one of the largest oil and gas producers in the world, with significant oil and energy assets across 16 different countries. They have the expertise in exploration and production in deep and ultra-deep waters as a result of almost 50 years of developing their offshore basins. Back in October of 2023, Petrobras did update their dividend policy, which will result in a lower dividend moving forward. They'll now be paying out at least 45% of their cash flow, down from 60% previously. But even with this change, they still have an incredibly high dividend yield. Their current quarterly dividend comes in at 36 cents per share for a dividend yield of 16.5%. And the company will be sharing their next quarterly report here in just a few weeks, upcoming on March 7th. Analysts will be anticipating earnings of $1.10 per share, which is down slightly from the previous year. This follows their last quarter back in November, where they did fall short on the earnings side. But the company did have solid recurring EBITDA of $13.7 billion US and had operating cash flow of $11.6 billion, which was their 4th highest ever. The Petrobras stock does come in as a strong buy based on 5 current analyst ratings, breaking down to 4 buys and 1 hold. The average price target comes in at $18.84 for an upside potential of 8.3%. The most recent ratings coming in just this past week. On the low end, we do have a buy rating with a slight downside of over 1% and a high-end price target of 16% coming from Bank of America. Our second high-yield dividend stock is Ardmore Shipping. They trade under the ticker ASC, currently priced at $16.52. In the past year, they're up 7% overall, but have climbed 28% in the last 3 months. Ardmore Shipping provides shipping services worldwide. With their modern, fuel-efficient fleet of mid-sized tankers, they provide seaborne transportation of petroleum products and chemicals worldwide to oil majors, national oil companies, oil and chemical traders, and chemical companies. Ardmore introduced their dividend policy near the very end of 2022, where they said they intend to pay a quarterly cash dividend equal to a third of their adjusted earnings. Their most recent quarterly dividend came in at 16 cents per share for a dividend yield of 7.19%. The company will be hosting an investor day in just a few days here on February 15th, where they'll also share their 4th quarter report. Analysts will be anticipating earnings per share of 61 cents, and this follows their 3rd quarter back in November, where they did report 49 cents per share, beating estimates by 5 cents. Revenue came in at nearly $87 million, beating expectations by over $31 million. Ardmore Shipping does come in as a unanimous strong buy with 5 current analyst ratings, and better yet, 4 out of those 5 all have the same price target. The average price target comes in at $19.40, which would be an upside of 17.5% from current prices. And that is because we have one low-end price target here at $17, while all of the rest come in at that $20 price point for an upside of 21%. And our third high-yield dividend stock is LADR Capital. They trade under the ticker LADR and are priced at $10.74. The stock is fairly flat overall the past year, just up 0.8% as we've had some highs and lows here, but they have been climbing upwards, up 5% in the last few months. LADR Capital focuses on commercial real estate financing solutions. They are an internally managed commercial real estate investment trust, or REIT, with $5.5 billion of assets as of the end of 2023. As one of the nation's leading commercial real estate capital providers, they specialize in underwriting commercial real estate and offering flexible capital solutions within a sophisticated platform. As a REIT, the company is required to pay out so much of their earnings as a dividend, and they did just declare their most recent last week along with their earnings report. Their current quarterly dividend comes in at 23 cents per share for a dividend yield of 8.62%, and the company just reported their Q4 earnings report where they had revenues of $121.26 million, well exceeding the analysts' expectations, and earnings per share of 32 cents came out 1 cent ahead. LADR Capital does just have 3 current analyst ratings, but they all did reiterate a buy following that last earnings report. And that strong buy consensus comes with an average price target of $12.58 for an upside potential of over 17%. And down below, we have a pretty close range of price targets too, from 16 to 18% upside. So that is a quick look at 3 strong buy stocks, all with a high dividend yield and priced under $20 per share. Let me know your thoughts on these companies in the comments down below and which one catches your eye the most. I always appreciate hearing from you guys. Of course, always keep in mind that these videos are never a suggestion to buy or sell any specific stock, so please make sure you're sticking to your own investment plan and doing your own research and due diligence. Thanks so much for watching. Have a great day, and I'll see you back here next time.